Hello and welcome. Yesterday, the euro went up to the May highs and then sank after the ECB meeting. A mass sell-off took place because the ECB monetary policy decision disappointed hawkish market expectations. The details of the decision were mostly unimpressive. Thus, the regulator said it would end net assets purchases by July 2022 and raise the key interest rate in July. President Lagarde also said that the regulator would start taking measures should the inflation outlook worsen. All these disappointed the market, especially ahead of inflation data in the United States. If US inflation slows from the previous period, it will mean that figures have already achieved the peak and the Federal Reserve's further actions will help take prices under control. However, should inflation accelerate again, it would trigger market jitters, boost the dollar, and drive the equity market further down. Speaking of the macroeconomic calendar, all these important releases are scheduled from the North American session. The monthly core inflation rate is forecast to come up at 0.5% in May, and the annual core inflation rate is estimated to ease to 5.9%. Meanwhile, annual inflation is likely to start at 8.3%. In addition, ECB President Christine Lagarde will deliver a speech. Other macro reports will be of secondary importance and have no effect on the market. Since major price movements are expected right after the release of data on US inflation, the pair will mostly trade in the sideways channel with a volatility of 20-25 pips before the publication. Should the quote fall to 1.0602, the MACD form divergence and the false breakout occur, long positions could be opened with targets at 1.0657, 1.0687 and 1.0714. In other words, the pair will show growth if inflation in the United States slows. Alternatively, it will become possible to go short after a false breakout at 1.0657 with a target at 1.0602. If the quote breaks through the market and consolidates, it may then head towards 1.0581, 1.0559 and 1.0535. Short positions from 1.0581 and 1.0559 could be considered after a false breakout only and opened on a bounce from 1.0535, allowing a 20-25 pips intraday correction. As for the British pound, bulls will try to protect 1.2480. In case of a false breakout of the mark, a buy signal will be produced. So far, the pair has been unable to leave the white sideways channel. Therefore, long positions could be opened after a false breakout at 1.2480, with targets at 1.2520, 1.2556 and 1.2594. Selling could be considered from these levels on a bounce, allowing a 25 pips intraday correction. However, if bears protect 1.2520, the price will fall to 1.2480, test the mark and consolidate. An additional signal will be made with targets at 1.2457 and 1.2432. Whether the quote will be able to go below the lower limit of the channel at 1.2432 and resume the bear market or return to 1.2520 and head towards the upper limit of 1.2594 will depend on the result of the US inflation report. If the price breaks through the mark, new ascending channel will start to form. The quote may return to the May high. Good luck.